Thank you very much for joining us today. We're here to learn about the MakeSpace capital offering. I'd like to welcome Danny and Catherine from MakeSpace, and they are here to teach us more about this investment option, why it might be a fit for your portfolio. And if you have any questions after seeing this presentation, please reach out to your Raintree Private Wealth Advisor. And with that, I'll turn it over to Catherine to get started.
Okay, thank you so much for the introduction, Corey. So welcome everybody, and thank you so much for taking the time today to learn more about this incredible investment opportunity, MakeSpace Capital Partners, the fund. Before we do get started, I'd just like to quickly introduce myself. So my name is Catherine Rebeko. I'm responsible for the capital raising initiatives of the firm as well as investor relations. Also on the call, we have Danny Friedman. He is our wonderful owner and director of business development. And with that said, let's just turn it over to the first slide, which is our wonderful disclaimer slide. So before we get started, here's a brief disclaimer for you all. Not too sure what else I should add around this. Danny, is there anything you'd like to add?
No, I mean, there's an offering memorandum. So if you want to learn more about the fund, talk to your advisor and read the OM.
Okay, perfect. So here we go. Today, we'll be providing a high-level overview of what MakeSpace Capital Partners is all about, why you should invest in the storage industry, and what makes us unique as an investment opportunity, and why is now the time to invest, given the current environment we're currently in. We're also, throughout the presentation, we'll provide you some updates around some exciting new acquisitions, as well as existing acquisitions that are going on in our pipeline right now. So first, let me just go over what is the MakeSpace Capital Partners Fund. So essentially, we are a private self-storage fund, and we're open to retail accredited and institutional investors. And our plan, our main goal is to build out a portfolio of stabilized cash flowing storage investments in diverse markets across Canada. And lastly, we are also a fund that, because we have these stabilized cash flowing properties in the portfolio, we're able to pay out immediate distributions to our investors. And currently we're at a 6% annual yield that's paid out quarterly in cash or DRIP. And we also have an exit plan for investors. So to cover the first question of why self-storage, I think this slide does a great job in just briefly illustrating how rising population growth in Canada creates more demand for self-storage. So as you can see, hopefully you can see in this chart here, there are projections for the Canadian population up to 2063. So there's very much an upwards trajectory of population growth rising quite rapidly in Canada. And this is across all growth scenarios, but we're focusing on just the medium growth scenario of the yellow line right here. And in this growth scenario, we're expected to have 55.2 million inhabitants by 2068. And this just creates a massive opportunity for self-storage, because at the end of the day, when there is rising population growth, this creates a surge in condo developments, urban developments, which creates a high demand for self-storage. Essentially, the spaces are much smaller to fit, like the houses, the condos, all the new developments. They're being built into these small, densely populated areas, and people are getting relocated to different areas, and they need a place to put their things. And we are the experts in this field, and we see this trend continuously happening, and they just need a place to put their things. So it's driven by organic population growth, healthy immigration. Once again, living spaces are getting smaller. So this is just one key reason as to why self-storage, and a quite significant one. Danny, is there anything else you'd like to add to that?
I read today that Canada has a backlog of 2.2 million immigrants ready to come in with paperwork filled to be processed. So it's just that the immigration policy is very real. We're rapidly growing community. If you think about 2.2 million people added to our population, that's like an entire city being added to our population. And you're right, places are getting smaller, people are moving in, and they need a place for their stuff. And that's where storage demand comes in.
Yeah, for sure. And the next slide just highlights how self-storage has performed over the long term. So this chart here is sourced from NAREIT in the United States, and it stretches over quite a significant period of time, all the way from 1994 to 2017. And what really stands out here at the very top in this teal blue color is self-storage was and is the best performing asset during that entire time period. And not only was it the best performing asset, it had lower volatility returns, which means it was incredibly stable through a variety of intense economic and market conditions, which were definitely happening throughout that time period. So just once again, during that time period, it was obviously the 2008 recession. We've been in the pandemic over the past 2 years, and it really demonstrates there hasn't been a bad time to invest in self-storage because it continues to be the highest performing asset class for the past 30 years, which is pretty telling. Anything you'd like to add to that, Danny?
No, I think you said it. There just hasn't been a bad time to invest in self-storage really in the last 30 years, and that continues to today.
Yeah. And the next slide really highlights that point once again, is so the previous slide is around long-term self-storage performance. Here is a breakdown of different sectors and their return. So as you can see, self-storage has come out on top over the last 21 months, which were all pandemic months. And not only was it coming out on top, it had a significant return on it relative to all the other sectors with a 71.7% return. So just once again, reiterates the strength of the asset class. I won't spend too much time on this slide, but it was introduced to me when I first started my role. I had to Google who Bobby Unser was. He was a successful Indy car racer in the US. And he said that success is where preparation and opportunity meet. And I strongly believe this applies to MakeSpace Capital Partners, where the strategy has continuously proven solid and we are eager to expand and the opportunity is great and sizable. So with that said, on to our growth strategy, what really makes us unique. Danny, do you want to cover this slide?
Sure. So we started off in 2019 with 2 self-storages, and with the goal of building a portfolio of 15 to 20 storages, which we have 9 storages in the fund right now. So well along that goal. Our growth is simple, two-phase, but simple. One is acquiring new assets. So we take the funds that we raise and we apply them to new assets, like the storage we just bought in Prince Albert, Saskatchewan, 32,000 square feet. And we continue to do that. We're in the market looking for more assets. We expect to build this fund even for this year, and I'll go into that we'll go into that in a minute. And then expansion of our on-site storage. So each of our sites that we buy, they have a little bit of extra space. We can put in more parking spaces. We can put in new units through containers, and we have portable storage that we can put into the communities, and all drive income to the sites. And then obviously any self-storage, any business out there, you want operational improvements and rate appreciation. And rate appreciation, I mean, on everybody's mind right now is the inflationary times that we're in. It's yet another cycle, economic cycle, that storage has to prove itself out in. One of the ways that we prove ourselves out in inflation is keeping pace with inflation in our rents. And we don't have any rent control in self-storage. And I think that we'll continue to demand sort of a fair rate for our product as demand is there. And the last is just to build our brand. We now have again, 8 storages across the portfolio, containers in these markets, nice tidy brand and MakeSpace, which you can see when you check out the website. So all that grows the NOI and the income and the value of the fund.
Mm-hmm. Which brings us to our business model, it just kind of further reiterates our growth strategy.
That's simple business model. So all of the storages in our fund are profitable. They're all stabilized. So they do spit off money. They got a 6% yield, and that 6% yield that we've been paying and continue to pay is to investors. We expect to continue to pay that throughout the fund. And then in the end, we are anticipating a portfolio sale so that the value of the assets is worth, as a group, is worth more than the individual assets. And if that's the case, if you agree with us, that's the case, then we should have a return of 12 to 15% that also goes to investors, which is, that's a simple strategy. You pay yield now, and then when we exit, share that profit with investors. And if you look at the chart there below, the little graph, I think that's a great sort of just quick explanation of our business. Typically if you build a self-storage, you got to put shovels in the ground, buy the land, put shovels in the ground, build a building, and then lease up the building. And you can see that dip before stabilization there in the chart, and that's what that represents. Well, our self-storages, we buy at the point that they're already stabilized. So there is no lag on capital. And not only do we run the self-storage as well, where you get sort of that, straight line appreciation, but we also have lots of ancillary revenues, especially portable storage, that adds to the value over time. It's like having a multifamily 100-unit development that's maybe a 5-story building, and then being able to put on another floor every year. And that's what we've been able to do. We've proven that over the last 3 years, and we believe that we can continue to do that as the future.
I can take this one.
Yeah,
so,
sure.
So just further to what Danny said, what really makes us stand out is obviously our compelling business model, but we're not able to do that without our larger corporation, which is MakeSpace Inc. So we are truly part of a well-oiled machine, and it's what makes us stand out. Through having MakeSpace Inc. as a larger manager of the operations on such a larger scale, we're able to provide all these top-of-the-line services that you see here. So we have automated bookings and billings. We have contactless process entry and exits, contact center integration, operations team, in-house property development, so construction, and our fabulous in-house marketing team. So as a result of all these top-of-the-line services that is very unique to the self-storage industry, this helps ensure consistent customer experience and communication without incurring the cost to outsource, which I think is quite key to note. And then, yep, I think that's, is there anything I missed there?
No, I don't think so. Like we do it all in-house. There's very little cost to fund. They literally just, there's like 2 salaries to fund. We have like 70 employees in the company. So they really benefit from this like entire corporation that is working to increase the value of the fund and the storages within the fund. Yeah.
Mm-hmm.
And you can see on the next slide the growth of the fund. So my partner Vaughn and I had 2 storages, one in Winnipeg and one in Pender Harbor, when we decided to start the fund and see if we could expand more aggressively. The idea was, instead of owning all of a small pie, that we would own just a piece, but of a much bigger pie, and it would be shared along with investors. And with that, once we started raising capital, we were able to invest in Prince George, in Regina, in Port Coquitlam, and growing from when we first started, just $10 million in assets under management to now over 60 million in assets under management, is where we stand right now. And we expect to be, we're hoping to be over 100 million by the end of this year. It really has been exponential growth now. So we're excited about that. And we just acquired, as I said, a storage in Prince Albert, and before that, a storage in Port Coquitlam. That's quite a jewel for the fund.
Mm-hmm.
And this is just a look at our assets right now and how they've done. And you can see, as an example, Pender Harbor came in with that's near Vancouver, for those of you who don't know it. We have a nice storage there. It's a legacy storage. Acquisition price was at just under 5 million. It's currently valued almost $10 million. That's in 2.5 years. Winnipeg came in at just over 5 million. And within the 2.5 years that's been in the fund, it's at 7.55 million now. That's an appraisal that came in this year. Prince George came in at 14.35 and now appraised at over 20 million. Again, we see that growth because we're able to not only run the facilities well, and self-storage is done well in general. Like, it's not just MakeSpace, like storage in general, there's high demand. We know our markets well, we market to them well, but then we layer on the portables that allow us to aggressively grow the revenues to each of the storages. Both Regina facilities and Port Coquitlam were bought this year, and actually now we have another storage in Prince Albert, as I mentioned.
Mm-hmm. And just something to add to that, that's really important to note, is that we're past the startup phase, and that's obviously shown through the trajectory of the growth of the fund and what we set out in the beginning. And we're just in that very healthy growth phase, which is clearly demonstrating the performance of our portfolio thus far.
Yeah, thank you. Yeah, totally agree.
So one of our greatest, well, it's not our greatest, a very revenue producing location for us, we're very excited about, is our Fremont location. It's actually located in Port Coquitlam, BC. We just acquired it not too long ago, as you can see, in February of 2022. The purchase price is a little over 22 million, so it's quite a large facility. It's got a little over 42,000 square feet. And 624 units, and it also has the possibility to build out because of just the sheer nature of how large it is. It's part of the Tri-Cities area, and just our market research and just all the market research we've done thus far shows that this is just a really great location for us. We're really excited about it. Just for us to get to this stage and acquire it was a little different, and I think Danny can speak to that as well.
So it's just a little bit of backstory. It took my partner Vaughn 2 years of talking to a realtor who knew this owner to convince him to sell. He really wanted to hold on for long term. It's a great asset. It's, you know, it is in the middle of a high growth area where all the industrial land is sold. All the areas that could potentially house a self-storage are already sold. And quite frankly, cities and towns, they don't really want more self-storage. It's a big building with only one employee. And it's not that interesting for them to get. They'd rather see like a Wendy's or McDonald's or a hotel or something that has higher employment than a self-storage occupy that much space. So we don't see town or city approval for more self-storage in the area. And the demand is massive. I talked about 2.2 million people coming in. Something like 80% of the immigrants that come to Canada come to urban centers, and that's Toronto and Montreal and Vancouver for the most part. And so, you know, this is central to Vancouver. It's just a high growth area that we think will, you know, add to the demand for the storage over time.
For sure. And these are just a few more statistics around our Fremont location. So as I mentioned before, here is the square footage, units, 624. The occupancy is actually at 93% now, not 91%. So it further shows just the great demand that is in that location itself. And yeah, we're very excited about it. Another location that we'd like to talk about is our Prince George location. So just a quick high-level overview around this one. It opened in July 2020. We have 4 locations within it, and we recently completed our Prince George development project on Hartway Drive, so right at the top here, where we added an additional 28,000 square feet of construction because the demand is so high. So Prince George continues to be just a high growth location for us. It's a really wonderful location. So the population growth is around 2%. It's the largest city in northern BC. It's the gateway to the north. And just once again, our market research has proved successfully that this continues to be a really high growth area for us. And we see the demand there, and which is a big reason why we added the 28,000 square feet additional construction just to an additional location. Anything that you like?
Even more than research there, Catherine, like we're in the market, right? Like we've been doing it, we've been there for 3-4 years now. And so we knew that the demand was there. It's amazing. Like we opened up, what was it, 3 months ago? I think 3 months ago, the new location, and we're already at
4 months, yeah.
For 4 months, we're at 60% occupancy on that additional square footage. It's incredible. Like a typical self-storage takes 2-3 years, but because we're in this market and knew the demand, we could with confidence build that storage and know that it would fill.
For sure. And here's just a quick aerial view of our wonderful Prince George locations. And once again, a nice visual of our portfolio. So as you can see, here's a snapshot of all 8 of our properties and their occupancy rates. Once again, we are really proud of the fact that, you know, our occupancy rates are quite high across the board, and we also have we have 5 upcoming proposed acquisitions also that we are planning to add into the portfolio, which I will showcase on the next slide. Well, these are existing before I get there. So these are existing properties. So as you can see, we have a couple in BC and 2 in Regina and Winnipeg, and that's our existing, and this is with our proposed. So it stretches all the way from Vancouver Island to Kitchener. And is there anything anything else I'd like,
I'd just like
to
to
add
point
around
out we're
that,
pretty
Danny?
proud of the 2 self-storages we show, Port Coquitlam and Prince George and Pender Harbor and Winnipeg, and you can see how we're eliminating the single city or single market risk because we're really going across the country, and that's what you're really investing in, is this portfolio of these assets as a group. You get a piece of each of these storages when you invest, which is very unique for investors in anywhere in self-storage.
So these are the proposed acquisitions I just alluded to. So we have 5, one in Van Isle, Ladysmith, Edmonton, Calgary, and Kitchener. Is there any specific details you want to talk about?
I was just going to say, we don't usually do development. We don't do a lot of it. We'll just add on to sites, but you can see that there's one piece of land there in Van Isle. That's actually at the Victoria Airport. We've signed a 65-year lease with the Victoria Airport, and we'll be constructing our site right there. We do have a sizable portable fleet in the area that will be housed on that site. So it's just an excellent opportunity. The storages on Vancouver Island are bursting at the seams. They're all close to 100% occupancy. Again, we've been in that market for 3 years now and has seen the incredible demand. So that's going to be another really nice asset for the fund.
Mm-hmm.
And sorry, I'll just continue on there if that's okay.
Of course.
When we started, we sort of said, okay, well, how could we exit a fund? No, I'll go back to the next slide. Like, how could we exit the fund? What do we need to do here? And we sort of thought at the beginning, like, okay, well, if we build a portfolio, we could sell to a larger operator, a public vehicle, institutional investor, or maybe we just continue to grow it. But we really focused on just putting the fund together first, putting the storages together and doing, which is buying storages and growing them. And now that we're, as you mentioned, along that growth curve, we've proven we're able to do that. We're only 3 years away from a close and an exit. So we really should be thinking about the exit now. And all 4 options still remain very real. We've already been approached by larger storage operators. We've been approached by 2 companies who said that they think they could take us public. I've talked to a few institutional investors, and we could grow into an evergreen fund. One that continues to grow and become a real force in the Canadian market. So all those are viable. We're starting to explore them now, but we built a lot of value. So we think that there's going to be a nice exit for investors. And you can see in Canada, like Storage Vault, which is Canada's only public REIT, they've bought 2 portfolios in the last, since 2017 and 2019. I think they bought another one in 2021. It's not on the slide here, but they buy at a good cap rate. They pay good money for it, and it sort of proves our thesis that a portfolio is worth more than the individual assets within it.
And just very quickly around our wonderful management team. So this is our senior leadership team. And just overall, we have between 10 to 30 years worth of industry experience on our board, on our management team and our board. As Danny alluded to earlier, his partner Vaughn is the founder, and he's kind of our visionary and driving force behind the company, having dedicated 15 years to the space. Danny is our owner and VP of business development, and he has over 15 plus years of industry knowledge. And he, along with Terry Thomas, the CEO, both of them, they're out there doing a lot of the day-to-day and boots on the ground work and driving the company forward, along with Brian Banfill, our CFO, and Meg Calhoun. They are our finance experts. We absolutely adore them, and they are just wonderful resources to have. And then our non-management board members. So we have Joe and Reed that come from Brookfield Asset Management. So they both have a ton of knowledge to share. And Doug is actually a more newer addition to our board members, but he is also very seasoned and just a great knowledge base. And altogether, the vision and the belief in the company is so strong that the management team actually has quite a substantial stake in the company too. And it just further showcases how much we believe in our product. And that said, just to wrap up, we're nearly there. So what makes us great. The MakeSpace Advantage. We have an excellent management team of over 15 years of experience in the self-storage industry, and they maintain a current stake in the partnership. We know self-storage. We have a great pipeline of acquisitions. We have the ability to source acquisitions from the development pipeline of MakeSpace Inc. We have exceptional downside protection. We are quite recession resistant. We've weathered the storm throughout the 2008 crisis, as well as the pandemic, and just the current economic environment that we are going through. Self-storage has consistently come out on top. And lastly, we are cash flowing storage investments. So your money goes to work right away. And finally, just to fully wrap up, this is our current offer on the table. So we have a 6% annual distribution that's paid out in cash or DRIP quarterly with a total target annual return of 12 to 15%. As Danny mentioned around exit options, the fund is scheduled to close for July 29th, 2025 with potential extensions or our exit options as we outlined earlier. The DRIP option is available at a 3% discount. We are currently on our A4 series right now, which is a 70-30 split after an 8% hurdle. Our management fees are 1.5% annually, and we qualify for eligible investments, which include RRSPs, RESPs, and TFSAs. And one last thing that isn't on this slide is we currently partner with Olympia Trust, but we're happy to include other partnerships. And that just about wraps up our presentation. Thank you so much for your time today.
Thank you, Danny and Catherine, for joining us today. That was a great presentation, and we really learned a lot about MakeSpace Capital Partners and your fund. If any investors have any questions about this offering, please reach out to your Raintree Private Wealth Advisor, and thank you very much for joining us today.